Good evening. You have joined Max Riaz on PehchanTV. This is Sunday night Business Today episode. It's actually, in fact, our very first one. Look, today's topic is something that I think if you are an investor or in business, I think it has long-range implications if you are considering investing or starting a business or looking for opportunities. So let me tell you what I'm about to present to you. I have a guest. He's coming from a part of the world which I think in the next 15 to 20 years it will rise to be one of the core destination for financial capital. So I'll give you a bit of a context from where I'm coming from. In the last 20 years, 15 to 20 years, what we've seen is a shift of economic, let's call it activity and gravity. That gravitational pull, which used to be very much at the heart of the US, it used to be very US-centric, used to be very European-centric. We're seeing that gravitational pull or forces change from these two centers towards Asia. And you all would have heard about China as being one of the countries that have often been spoken about in the media. But the gravitational force is actually much broader than China. It actually captures the countries across the Asian belt, and I would say insofar as what is usually termed as emerging markets. Now, emerging markets actually includes China. It starts from Australia. Even Australia is probably a developed market by most standards, but certainly going up to Indonesia and Malaysia and all the way through China, through to the subcontinent, Pakistan, India, and into the Middle East. This whole region is part of emerging markets, also South Africa and South America. Brazil is the key there. So these countries together will become the growth engine for the world or the global economy in the next 20 years and beyond. Now, what that means is the previous centers of the economic activity, Europe and the US, have obviously we live in these parts of the world. A lot of the viewers would be living in these parts of the world. They've enjoyed huge boon on the economic development front based on the burgeoning expansion of their industries from biotech, nanotech, and even the old industries of automotive, but more recently in the space of smartphones and telecommunications. Now that obviously has led to unprecedented levels of wealth creation and surplus capital. So that's where it's ended up. So these countries have now found themselves in a position where they have a lot of capital, literally trillions of dollars of capital, sitting in literally bank accounts earning 0% interest rate, or in some cases negative rates. Now, what that means is they are looking for opportunities. So what tends to happen is when capital is sort of runs out of opportunities, it tends to go further afield looking for opportunities. So what we're seeing is in the markets that capital will increasingly, and has been, the surplus capital from the developed world will start to seek opportunities in the emerging markets. So beyond just China, beyond Hong Kong and Singapore and Japan. So what will happen is that capital will go through an allocation process. That allocation process tends to happen through the financial markets, the listed stock exchanges. They are quite an efficient way of allocating capital to companies, industries. There's also obviously the banking channel, and then there is the private capital sort of goes through the venture capital sort of avenue and private equity. Now, what I want to focus on today is I want to shed light on a particular market which has in the past, this conversation will go over a number of episodes. It's a market that sits within that emerging market space. It's not China. It's what China has planned in the years to come will directly impact its growth, and we'll touch on what all that means. The country I'm referring to is Pakistan. It's and the stock market I'm referring to is Pakistan Stock Exchange. There are a lot of myths and innuendos about the exchange, but what I'm hoping is that with the guest that I have got on today, through the conversation that I'll have with him, that in the next few episodes you will get at least at a higher level understanding, as to what the structure of the market is, the companies and the industries that it sort of has, and how the returns have. I mean, we've heard about volatility. I mean, the Pakistan Stock Exchange loses money, and people sort of come in and sort of lose their lot. It's actually that could be said about any market. It could be said about Australian Stock Exchange. It could be said about New York Stock Exchange, any stock exchange. So, but when you dig through that innuendo, those headlines, it's actually quite a promising market, even what we've seen thus far in the last 20 years. So I'll stop my sort of piece on this exchange to this point. And what I want to do is I want to bring on my guest. He is from Pakistan. He's currently in Pakistan. He works for one of the major brokerage houses in Karachi. And he's I'm grateful that he's been able to sort of avail some time. Hello, Satish. How are you, mate?
Hi, Max. How are you? I'm good. How are you? Thank you.
Thank you.
Thank you for inviting me over.
Yeah, thank you, Satish. Look, Satish, I would like to, before we get started, I would like for you to share with the audience, your background,
Yes.
your experience, and maybe even touch on your firm and its sort of position in the market there, and so the people sort of really get a good perspective of that, and context that we're talking to the person really in the throes of the market there, and really someone who really understands Pakistan economy and Pakistan Stock Exchange. So over to you.
Okay. Thank you once again. Just I'll start with a brief introduction of myself. It's been 10 years I've been associated with financial markets in Pakistan. I've had, I started my career with a brokerage house only, which was a WICAR based brokerage house, and then it was owned by Dawood Group, which is one of the largest conglomerates of Pakistan. Then they moved out of the brokerage house. I shifted to their conglomerate only, Ingro Corporation. I worked there for 2.5 years, working on their energy strategy. And then I've also worked for a buy site, which is which is a subsidiary of one of the largest banks of, in fact, the largest private bank of Pakistan, HBL. I worked with their asset management company. We used to manage $600 million of assets domestically, including equities as well as fixed income. My forte has been research, investment feasibilities, and even now, since last year, I've been working with Smile Iqbal Securities, and as director of research, we have been working on developing some different business ideas or equity investment ideas for investors, range of investors. We are a mid-size, in fact, amongst top 5 brokerage houses of Pakistan. We have 5% market share currently, and we have retail, high net worths, institutions, foreign clients, every kind of client. Family offices are also part of our clients. So Smile Iqbal, if I jump onto Smile Iqbal, it's basically owned by the family who owns Candyland Smiles Industries, which is one of the larger industrial group based out of Karachi only, and they are mainly into FMCG business, and this is also one of their businesses in brokerage house which they're operating. So we also have, like at Smile Iqbal, we do equity brokerage. Which we have a sales team which runs this broking department. We have a research, full-fledged research. We cover all the major sectors of the economy, starting from banks, oil and gas, industrials, consumer, FMCG, pharma. So we cover a wide range of sectors when we cover research. And we also have a corporate finance arm, which basically does M&A, IPOs. We've been involved in one of the largest IPO of Pakistan, which was Interloop. We were book runners in that issue. So we are also like on the corporate finance front. Ismail Iqbal has been doing a lot of capital raising through secondary markets as well. We've been underwriting a lot of right issues. So when listed firms only, they need to raise more capital through equity. So we help them on that. We are also gradually developing our retail front and looking forward to exploring the online trading platforms. Like we already have an online trading platform, but we're trying to market it more. And since we see a lot of potential in expansion of the market as well as economy, so we see that there's a big opportunity coming up. Pakistan is a big opportunity as a foreign investment destination, as well as a good investment destination for local investors, be it retail or be it big capital providers. So that's a brief introduction about myself
that's
and
quite a yeah, yeah. We were talking about Habib Bank Asset Management, right?
Yes. Yes.
I want to understand. I mean, you've obviously worked with those guys, and it's a very prestigious investment house. Are they investing in Pakistan fully, or are they sending some of the allocation to overseas markets, or what's their sort of portfolio looking like?
Basically, the asset management house, they have different funds. So they are mainly domestically investable funds only. So they have equities, they have fixed income. Those are domestic funds only. They don't have overseas funds. But with the HBL Bank, which is the parent, they have their own books, so they manage their investments. So they have branches across the globe, and they invest in overseas markets, but mostly restricted to sovereign bonds or fixed income investments, or opening up, or whatever is required for overseas operations of banking. So their core is banking, not investments. The investments arm of the bank was started in early 2007 actually. So that is not that older organization. So they are currently trying to focus on domestic assets or domestic markets as well only. At least now.
Yeah, and that's why I'm setting a bit of a context there. You know, that's a positive. That's a positive. The fact that you've got a quite a sophisticated and prestigious investment house allocating a lot of capital through the Pakistani stock exchange to the listed companies there. That's a vote of confidence, in my opinion. And we'll talk about the institutions that invest in Pakistan, but let's just take a sort of a broad canvas on the Pakistan Stock Exchange. I mean, is it actually Pakistan Stock Exchange or is it Karachi Stock Exchange? What's the
so you spotted it right. Basically, it was Karachi Stock Exchange until 2016. It was set up in 1949. Karachi Stock Exchange, which was a guarantee limited. It was not a due mutualized. And then in 1970, we had Lahore Stock Exchange set up. In 1989, we had Islamabad Stock Exchange, which was set up. So we had 3 exchanges existing in the country. In 2016, government demutualized, privatized stock exchange, and made a single entity, which was Pakistan Stock Exchange now. So it's now Pakistan Stock Exchange, which has indices which include one of the main benchmark index, which is KSE Karachi Stock Exchange. Like it used to be KSE 100 index. It's not still, the index is still KSE 100, but the stock exchange is Pakistan Stock Exchange. So it's one stock exchange in the country having different indices. They have KMI 30, KC 30, so different indices. The key benchmark, or the, what you can say, mainly used on the street, the key benchmark is KC 100 for equities.
Okay. Okay. And what are the sort of products that securities that are listed on the stock exchange in terms of equity
Uh,
securities and
Their
debt securities?
equities debt is also listed. So most of the sukuk, like Islamic, which is Islamic bonds, private bonds, they're also listed.
Yep.
They're relatively limited issues because bonds have been lately been started to list, but still a decent size. Like recently, like 6 months back, only KCK, which is one of the largest utilities of the country, which is the only utility company existing in the country. It's a Braj sponsored, which is a Dubai-based investor. They launched a sukuk, which was a 25 billion rupees sukuk. So it was a big sized sukuk, and it had institutional as well as retail investors. So that is listed on the exchange. So we
By the
have
but
equity. Yeah,
yeah,
sure, please.
and so what's the return on that sukuk? It's what sort of yield or what sort of return percent it's giving investors? The sukuk that you just mentioned.
It's Kibor linked, so it's generally Kibor linked. Whatever is the domestic interest rate, so it's variable rate linked, and the spreads generally vary depending on what the credit rating is. So this company it has effectively a monopoly in the region in Karachi. So they have they had limited spread. Just 100 basis was the spread over variable rates. So variable rates, if I give you some basic context
Just
to the
yeah, just
investor,
broad numbers. Yeah.
it was 13% in January, but now after monetary easing, it's down to 7.5%. So
Okay.
effectively, if I invest in K Electric Sukuk, I get PKR 8.5 to 8%, 8 to 8.5% return on my investment. So the
Okay.
coupon that I get.
And
So we
for
have equities. Coming back to the products, I just list that down. We also have derivatives, which is futures. So you can trade into futures of equities. So not debt, but equities. We have futures and a fairly liquid market. Roughly 15 to 20% of the market is in futures only these days. So when you have high volumes these days, we are having good volumes. The futures market is quite active.
yep, yep,
We
yep.
have MTS and MFS, which is roughly, which you can say a leverage product. So you can borrow money against securities, or you can you can invest into securities and lend money as well. So those are also
Right.
kind of instruments available to investors here. MTS, MFS, these are those also leverage products. You have derivatives, and these are just 3 4 main products which are currently offered. But let's see. But just one thing I would like to go back a bit. Like when you demutualized, the shareholding of PSX was also changed. So
Okay.
then Chinese investors came into, and currently 35% of the exchange is owned by Chinese. So they had
Really?
big plans on
Wow.
launching new products in the market. So we can see some more
Yeah.
product launch as we move. ETFs were recently launched as well. So just to give you that context, that ownership changed, and now we have more of proper structured board at this exchange, and they are running. They're doing what you can say a good work on the product launch as we move. So we
Uh,
have 4 ETFs at the moment as well. So that is also one of the product lines which is offered.
yeah, I mean ETF is a very important and very popular product in the Australian market, or even the US. It sort of gives mom and dad investors a straight allocation, diversified allocation to the entire market. And in fact,
Exactly.
speaking of the Australian, the Pakistan Stock Exchange, the main index there, I was actually I was doing a bit of research before this call. The actual index has, over the past 20 years, it's actually increased by 41 times. Like 41 times,
Yes.
it's a phenomenal journey. I mean, like we hear about, volatility or whatever, but if you held an ETF even, not that there were ETFs in it 20 years ago, but like the year 2000, if you invested in the stock exchange of Pakistan, it was what, 1,500 points or whatever.
Points, yes.
It's now
And today,
42,000. And
yes.
I looked at a similar comparison to Australian Stock Exchange. It's gone from 2,000 points to 6,000 points, like only 3 times sort of a return. So,
Yeah.
$10,000 invested in Pakistan, 20 years ago would be like, 420 or something $1,000,
Yeah.
and compare that to Australia or even the US, you're looking at $30,000, $40,000. So it really does bring into perspective that, our firm, or we, long-term pension fund investors, so they're the sort of things we look at. As I mentioned in the opening of this episode, that we're looking at the big trend, and the big trend is the migration of capital into all of that Asian region, and China and beyond. And you're now telling me that China's got investment in Pakistan's stock exchange, and as they say, follow the trail of money. And smart capital is lining up in that direction. Even if you look at valuation, and we'll touch on the valuation, like the stock exchange is still very, very cheap.
Yes, it's 8 times earnings.
The Australian Stock Exchange is trading at a multiple of PE, multiple of 23 times, and Pakistan is trading at 7 times. 7 times.
Yes.
That, in fact, we do a monitor of 50 stock exchanges around the globe. We put out these charts on a monthly basis, and it's the cheapest valuation amongst all of the 50 stock exchanges in the world, in our universe that we look at. It's amazing. So in terms of the size of the market, what's the capitalization of the PSX in dollar terms?
It's actually very small. Like, if in dollar terms, if I give you the context, we, like, on Friday close, we are at $39 billion. So that's a very, very small market, and not only relative to other markets, we are very small relative to our own self. Like, if I give you a context, like GDP to market cap to GDP is one of the anchors which is used. So we're still at 14%. So our GDP is $280 billion, and like last reported annual number is $280 billion, and today our market cap is $40 billion. And if I bring other market like US markets into context, the number is roughly 140%. For Australia, that number is 100%. So that at least like Indian market is more than 100% as well. So what the upside that I see is that even if you go even if our market goes twice 2x from current levels, it's still at 30%. It's still not close to 30% of the GDP. So probably we need exactly. So probably that's one of the anchors which one can use. And one thing just I would like to clarify on the previous part, that our market has grown for 40x, but we've had currency depreciation as well. So factoring into that also, even if I factor in that, we still have got like 16 to 18 odd percent annual average returns over the past 20 years in dollars. So that's still a big return for an investor. And even then, you are trading at 8 times earnings or 7-8 times earnings. So that's a compelling case in my view, at least.
Yeah, I think the 7-8 times earnings will just will start. I think the multiple will just continue to re-rate, I think, over time, as more and more capital sort of comes to that part of the world. And I think what investors also need to see is the governance of the around the stock exchange and the securities market there. We have heard of stories in the past where people have been front running or insider trading and those kind of shenanigans. Look, that's not isolated to Pakistan. That happens everywhere. But I guess the main thing that the investors are looking for, international investors are looking for, that the regulator is doing quite a heavy surveillance activity, and have got the resources and the tools to be able to survey the market and the trading activity. Because as investors overseas, we don't want to be in a position where we're investing alongside people in the on the insider side of a trade, and we're losing
Obviously.
money. So
Yeah.
can you say something about the regulatory sort of clampdown over the past few years? Have they been beefing up
Yes.
the resources on that
Yes.
front?
There's a lot of activity on the regulatory front, and things have improved, I should say, at least like over the past 10 years since I've been in the market. So when I joined in 2010 11, I started my career, and back then the systems were being implemented and things have been
Yeah.
technologically improved. So today, like in past, I remember I used to get like just to give you a context, I used to get a slip of dividend which was deposited, which used to be deposited manually in my bank account. Today, I get
Mm,
all the bank accounts directly credited into all the dividends I get them credited into my bank account. And more
mm,
importantly, the physical check distribution of dividends is not allowed. So you have to give a full-fledged IBAN number to the company or the share registrar. They directly deposit all the dividends, so
mm,
you are not deprived of your dividend at any cost.
mm,
So that is one of the small area I would like a retail investor would think from that perspective that my money is taken care of. Today, like things
mm,
are so easy that like I can go on to CDC, I can see whatever dividends I got over last year, I can have over my past 5 years, whatever dividends I've got, whichever
mm,
shares I had invested. So I can keep a track of all the investments. So technologically, things have improved. My capital gain, like we have a capital gain tax that is calculated on an automated basis
mm,
after every year, every month. So you can get every calculation that this is the stock you bought based
mm,
on FIFA accounting. This was your capital gain and loss.
mm,
So this is just one of the areas where they have tried. So now technology, if technology is just keeping a track of what I am doing, they're using the same to keep a track of what others are doing. Like in 2015, there have been
mm.
changes in the law as well.
Yeah.
There was a law that insider trading is a criminal offense in Pakistan now under law. So
Uh,
regulator can put
yeah.
up a criminal case against any insider, and there have been like 4 5 cases. One of them is against one of the political groups as well. Like
Yeah.
one of the political groups that the
Yeah.
SECP held that case, and that case is still running. So people like Supreme Court also
Yeah.
heard one of the cases lately. So that is an achievement in itself that we have legal grounds where insiders are being guilty of. So anyone like who would have an opportunity even would think twice because
Mm,
your career is ruined if you take any chance on that part.
yeah. Yeah.
So as you said, these things like white collar crimes are common across the world, but regulators
Mm,
have to play their role. And in Pakistan, I feel they're doing a decent job. Like even like at HBL Asset Management, we used to have a regulatory audit, or even at
mm,
Smile Iqbal, we do have regulatory audits. And what do they do? They check on our trades often, and they see that
right.
whether there was any mishap or any kind of any way that your client or the eventual investor is being jeopardized.
Mm,
Uh, so that is being audited. Like there's a random audit, obviously, but everyone is under
mm,
check. That any time the regulator can come in and check. There was one more thing which was applicable few years back, that we
mm,
now have to segregate cash balances at brokerage house. So what
okay.
if you invest with us and
Mm,
you sell the stocks, you buy, you sell, or maybe you remit $100, you buy $50 of stocks in one day, and then you say I'll invest $50 later. So
mm,
for SECP or for regulatory PSX reporting, NCCPL, which is also a clearinghouse, so we have to report them that okay, this is Max Riaz,
mm,
our client, and we have $50 of shares, which is parked into another independent authority, which is also part of the regulatory system, which is,
mm,
and $50 is cash, which is at this bank, but this is lien marked for this investor only. We are not touching this amount. So the transparency
yeah.
and that lines are drawn, like lines are so hard and fast now. So for someone to do something, it will require a lot of what you can say issues. I would say
Yeah.
I don't know if it's an easy job now because we are and I should in fact say that I should not, maybe I should say or not, but at times these things have limited our retail growth as well. Like when you are
Mm-hmm.
into too many procedures, like every retail account we open, we need to be sure of what's the source of money, what you can say, what's the job nature of the person. So that anti-terrorist financing, those kind of things are also curbed well now.
Yeah, they call that know your client, KYC checkup
Indeed.
before you
So
in Australia.
that's what.
Yeah, yeah,
So that,
yeah,
that KYC process is quite tedious now. So that is,
yeah.
I would say that the regulatory setup has I would say grown well. Like it's become powerful as the time has moved actually.
All right. Well, that sounds good. Look, I think we're running close to the time now, so I'll bring this episode to a close. I would like to thank you for joining me today on this episode, and we'll
My
take
pleasure.
our conversation further in the next episode, where we'll talk about. I'm sure we'll talk. There'll be a lot of other things to talk about the Pakistan Stock Exchange. So I look forward to talking to you again next week, mate. So until
Thank you.
then, take care.
Definitely looking forward. Thank you. Take care. Bye.